First and foremost, this was a really interesting earnings season. And so we had sort of that first wave of earnings. It was pretty good. We saw Microsoft really robust. TSMC was strong. We saw AMD crush it. And the only reason I'm pointing this out is everyone's kind of been wondering what's going to happen to a lot of these tech spaces. So my big prediction has been that enterprise tech, data center numbers are going to be good. And by the way, that's going to be somewhat thematic for the rest of this podcast, is that enterprise and data center are good. The question mark has been sort of what happens around more of those consumer, discretionary, gaming. There were some pundits that went on the air and wasn't us, because it would have been a better assessment, but they came on the air and said that NVIDIA's gaming numbers were going to get crushed this quarter as pricing had to come down, as demand is coming down. And I do think some of the demand stuff is going to turn over. We heard about the whole thing with the they got fined because there was a larger crypto customer base than what was necessarily being led on. But here's the long and the short. NVIDIA had a really good quarter. I mean, you look at the numbers and they beat, you had high volume growth, your earnings beat, you had revenue beat, you had, 8.5 billion versus 8.1. And by the way, this is a stock that's been beaten up 43% or so around the time that they had earnings. The company did see some operating expenses increase and lost $500 million due to the ongoing conflict in Ukraine and Russia. So that's pretty consequential right there. But Pat, like I said, we could talk about a lot of things here. Here's the thing: 83% annual growth in their data center business. So while gaming did slow a little bit, but it slowed to like 33%, still a good growth number. And by the way, it's $3.6 billion in that quarter. Data center has surpassed it this quarter at $3.75 billion and 83% growth. But as we saw with Micron, as we've seen with AMD, as we even saw with Intel, the data center numbers are extremely good and robust because companies are investing in cloud and data center architecture in a deflationary manner. And so I expect that will continue to be the case. Here's the caveat, and I'll turn it over to you to fill in the rest of what I didn't talk about here. Guidance was a little soft. And so they guided below expectations, and the street hates that right now. So even though this company is creating mega cash, has great customer, diversified business, I mean, even their ProViz business from the Omniverse stuff is hustling. So I'll let you talk about auto. No, I'm just kidding. No, but go ahead. I'll leave it there. Give you some stuff to munch on.
No, I appreciate that. And yeah, I mean, listen, the last part of my segment on CNBC, when I was talking about Broadcom, John Fort hit me up on NVIDIA. And, my statement, I'll reiterate that today. There was nothing that I saw from their earnings or even their forecast that gives me anything midterm that there's something wrong with either the markets that they're in that are big and growing or their competitive makeup in those. What people can't forget is that they also have a massive transition to their next architecture. They've been riding Ampere for over 18 months, and they're moving to a new one in the third calendar quarter, and that's super important. But yeah, gaming up 31% on an old architecture called Ampere. Data center 83%, like you said, which was really driven by hyperscale GPUs. ProViz 67%. You talked about the Omniverse. There's a lot of the growth in there that were notebook workstations. Again, old architecture. Auto did get hit. They were down 10%, and those are from cockpit declines that I don't know this for a fact, but based on all the Qualcomm wins in the cockpit, I have to believe that came at the expense of Qualcomm. They were down 52%, small part of their business on the other business. This was their specific crypto CMH cards, but again, a blip compared to gaming and data center from a size. Yeah, and their guide was lower, right? Yeah. China and Russia, right? $500 million. And then they said they were going to reduce hiring and make OpEx, I don't know, coincident with the revenue. The funny part here, though, is like this is just such a dumb blip. I'm pretty sure that Colleen Crest, their CFO, threw that out there as some red meat just to make people happy. NVIDIA needs more people, right? When you're growing freaking 50% or 46%, the dumbest thing you could do is to cut massive amounts of people. They're not going to do that. So I think they threw that out there.
Well,
This is Yeah.
maybe maybe they've been hiring like crazy, but I think they're just going to wait a little bit for this period and some of the fallout, and then some talent's going to end up coming their way. I mean, I don't think they're going to slow down. I just don't.
Make no mistake. If there is good tech talent, particularly in AI, they're not going to let that sit out there. They're not going to. This is Pat Moorhead talking, not NVIDIA, but this is just the reality of the situation. If you've ever worked in a mega growth company, it is crazy. Like, you just money whip people, you hire as many people as you possibly can just to keep up with the growth. And looking forward, we're going to go from the A100 to the H100. We're going to go to the GTX 4000, right? The best literally is yet to come for this company.
Yeah, I think we leave it at that. I think the crypto stuff, maybe that now that crypto has been destroyed largely across many categories, people are maybe slowing down. Some people are going to have to go back to work. The stay-at-home miners, crypto miners, are going to, can't afford to buy GPUs right now. They need to actually work jobs because every crypto you're buying isn't going up 10% when you dollar cost average and hodl all day long. So you can only go so far with that. But I think largely the gaming stuff will be fine. And I think the data center stuffs, they really are in their own class there at this moment in time, that don't have much competition.